News. Yes, we do this every day. It's actually something I've been doing for 20 years or so, but now I take my notes and I share my thoughts with you. Because again, when you're a real estate investor, you need to understand kind of what's going on with your consumers, because again, consumers are your largest competitors. And it also is nice to try to figure out where rates are going, as the cost of capital is often your largest expense. And it just lets you stay in tune with what's going on. So today, kind of what we expected. The the stock market is going to be kind of, I guess I'd call it choppy for a little while now until we kind of settle in. I am a little concerned that there's maybe not more of a reaction coming off of the events in Iran. Um, I think there's a general feeling that there's a lot of chatter and kind of threats being made now. Not really sure what those will turn into. I guess the one that is kind of jumping to the forefront, and we've actually talked about now for a couple of days, is cyber attacks. I saw one post where the New York Library website was tackled or defaced. So I think more cyber attacks are certainly out there. We'll see if they're just more like graffiti or if they are more, I don't know, an attack on companies and cities and things of that nature. So I also think part of me thinks that they are going to once again attack the oil infrastructure. I think it was, I don't know, 2 or 3 months ago, they executed those drone attacks on Saudi Arabia's oil fields with tremendous precision, right? I remember looking at the pictures, like they hit the same spot on every well or cap or whatever those things are called. So I don't think this is over. Hence my surprise that the trading hasn't been more negative. That said, on the flip side, we have seen a spike in gold, which we told you was coming, and that's a pretty good fear indicator. And then again, because we're real estate investors, we've also seen a flight to bonds, and why that's interesting for us is while not directly connected, they are correlated. The mortgage rate is fallen, and you can certainly go get 30-year money today, again, as an owner occupant at 3.75. And there were even a couple out there at 3.625%. That is crazy. Now, I believe these are both purchase money loans, so these aren't refi rates. Refi rates are a little higher. Uh, but again, as people get afraid, as gold goes up and people rush to bonds, uh, mortgage rates will stay low. And that's, again, something we track because, again, we are interested in the cost of capital. So we are going to watch that. Next up, did you see there was somebody that evaded capture or escaped, I guess, from Japan to Beirut or something? I don't know any of the details, but it sounds like a plane was chartered for 350 grand. Wow. Well, if you have the money and you want to escape to a non-extradition country, 350 grand doesn't sound like a bad deal if you've got the money. Apparently, he hid in some big um, machine case or something so they wouldn't be detected, but sounds like it worked. Sounds like he's scot free. So if you want to escape justice, be ready to write a check for 350K. I'm sure they're going to close that loophole, but I was just flabbergasted that that happened. Those things catch my eye. The trade deficit fell. I don't know if you've been watching this, but the trade deficit fell uh, to only 43.1 billion in November. Imports were up to 208 over 208, and imports were down to 250, call it 252. Still have a deficit, but the smallest over the last 4 years. And again, a lot of that's because of the trade war. Again, a lot of the drop was because of China, which you would expect. But again, um, we're tackling the deficit at least at some level. So we will see where this goes now that we're going to get to signing the phase one trade deal. I still believe, the last I heard, the phase one trade deal will be signed next week. I believe there is a Chinese delegation flying to the U.S. for the signing. So we will see that next week. Next up, non-ISM. Again, kind of sign of the larger part of our economy came in stronger than expected. You will remember, I think it was Friday that the manufacturing, right, the actual ISM came in low, came in at like 47, which anything below 50 is a problem. So it came in low, but the much bigger portion of our economy, which is captured in the non ISM, was actually at 55 and above expectations. I go back to my stance the last, what is it, 8 weeks now, if you've been watching this channel, that the consumer is fine, rates are going to stay low, unemployment's going to stay low, and if those happen to slow down, housing is going to pick it up because we're finally building housing again. So again, I think any talk of a 2020 recession is misguided. Now, obviously, black swan events like a World War III or other things could come to interrupt that, but it is unlikely with data we can look at today. It's unlikely to have a recession in 2020, and I think other than the election we have at the end of the year, I think 2020 is going to be a good year for the economy. We will see what happens in the final 6 or 8 weeks, but I think the first 48 weeks, or what would that be? 42 weeks are going to be pretty solid. Looked at the Fed rate minute notes that were released, and a couple of things jumped out at me. First, there was some worry or discussion about from the Fed representatives kind of talking about, hey, if we keep rates so low for too long, isn't that going to reward or encourage risky behavior? And my only answer is yeah, of course, right? When rates are too low for too long, you've got to look for return elsewhere. So yes, that is a concern. And then they seem to be talking about inflation a lot. They are fixated on inflation at 2%. Um, if they really want inflation at 2%, change how you calculate it, because lots of things that you and I buy every day are higher. Rent's up, prices are up, gas is up, education is up. Yeah, so computers are down and TVs are down. So what, right? You only get one of those, but I don't know. If you really want to get inflation about 2%, change how you calculate it, because we, the consumers, are seeing higher inflation. And then finally, the last article I saw kind of made me chuckle. Looks like Goldman Sachs is agreeing with this channel, right? We do daily financial news. Looks like Goldman must be watching because they changed their tune. They now say it's very likely that there won't be a recession in 2020, and they're saying there likely won't be recession for the next couple of years. I would tell you that uh, because we have an election at the end of the year, that could cause fear, uncertainty, and doubt in consumer behavior to change. I would say any prognosis into 2021 about a recession is foolhardy, because again, what causes a recession? It causes a recession is a change in your consumer behavior. And it is absolutely possible with the nastiness of the election that we will have coming up that we could have a change in consumer behavior, consumer psychology. So at the end of the year, we're going to have to buckle up. But at this point, yeah, 2020 is going to be fine. The economy is fine. It's only going to get stronger, I believe. And as long as rates stay where they are, and the Fed has been pretty clear they're not raising rates, it is going to be a very good year. So in the end, kind of my summary of the day, we're going to be choppy for a while. Any retaliation from Iran likely to be, contained in that region. Maybe some more drone strikes. Some cyber attacks are certainly possible, and probably the highest probability against American targets would be cyber attacks. If you have 350K and you get caught in Japan, apparently that's what it takes to rent a plane or lease a plane or whatever you want to call it. So you can escape and hide in I don't know, a trunk, I guess. Trade deficit was down. Mortgage rates staying low because people are rushing into bonds. Gold is up. December non-ISM strong, stronger than expected. Again, economy is strong, consumer is fine. The Fed's worried about rates encouraging bad behavior, and they are focused on inflation at 2%. And of course, our friends at Goldman, thanks for watching the channel. No recession in 2020. All right, everybody, have a wonderful day. We will talk to you tomorrow on the Daily Financial News, and I'm going to record a landlord story about actual rents and actual expenses and things of that nature. Let's see what this says. There was oh, there we go. Apparently somebody said there was a cyber attack yesterday for held ISPs down for 6 hours. I did not know that. I have to go look that up. All right, everybody, have a great day. Take care.